In just 1 week, $830 billion vanished from global tech stocks. No war, no recession, no financial crisis. The trigger was a single AI breakthrough. In early February, investors watched in shock as major software and cloud companies suddenly dropped in value. Salesforce, ServiceNow, Adobe, even Microsoft. In just 6 trading days, the market erased $830 billion from the tech sector. And this wasn't a normal market correction. This was something different. The catalyst was Claude Opus 4.6, a new AI model released by Anthropic. Unlike previous AI updates, this model didn't just assist humans. It autonomously discovered hundreds of critical security flaws inside real-world software systems. Vulnerabilities that traditional tools and human teams had missed for years. That moment changed everything, because Wall Street suddenly saw a terrifying possibility. If a $20 per month I can do the work of $500 per month SaaS tools, then what happens to the entire software business model? Investors began questioning whether customer support platforms, security tools, workflow software, and enterprise subscriptions still needed large human teams at all. This fear triggered what some analysts now call the SaaS apocalypse. Here's where it gets strange. Investors were reacting to 2 opposite beliefs at the same time. First, I will reduce spending on traditional software. Second, AI will dramatically increase productivity and growth. Both can't be true simultaneously. And that contradiction created panic, not because companies were failing, but because nobody knew how to price software in an AI-first world. This wasn't just a stock market reaction, it was a warning. AI isn't only making software faster or cheaper, it's rewriting the economic assumptions that tech valuations were built on. The question now isn't which software company wins. It's what is software worth when I can do the job alone. This wasn't a crash. It was a recalculation. And we're only at the beginning. If AI is reshaping the software economy, what disappears next?